There we
Yeah,
go.
I had a question about TradingView. Are you using it these days?
Yeah, well, the free version so far, and yes, I do intend to get the one of these premium versions because I think it's a lot smoother than what I'm
Yeah,
using at the moment.
I was wondering about those premium versions. If you buy a premium version and you're trading the paper account, do you get real-time data or is it delayed? Because right now in the free one, it's delayed.
Yeah, it's delayed. I see that. Well, anyone else in here have experience with TradingView?
Yeah, you have to upgrade. So
To
you're
get
gonna
a
have
new
to
you have
buy.
to upgrade. I think you have to buy.
Charts are separate and data is separate. I just actually not upgraded, but renewed my data. So you have to get NYSE and NASDAQ and ARCA for regular stocks. And then if you want CME, that's separate too. But it's $7 a month. I mean, it's totally reasonable for futures. And the
Okay, so
stocks,
what is it? What is it
stocks
all together?
36 a month. So ARCA, NYSE, and NASDAQ, they're all separate, 36 each for the year.
Okay.
So it's very reasonable. But yeah, I have premium.
Is that the one for $12? It's the cheapest one.
I pay for the year. I think it's $240, but I got that 70% off for the Black Friday. Like I said, sign up with them for 30 days. They should send you an email for 50% off, and then upgrade. You probably just need Pro. I have Premium because I like the 30-second charts, but you don't necessarily need them. And if you upgrade one more, you can get the tick charts.
And what about connecting your broker? Do you get real-time data if you connect your broker, like IB or whatever you're using? Do you know about that?
Yeah. Yes. Yeah, just connect.
So then you don't have to pay for data from trading.
Well, check because I've only done through props, and usually the props will pay for that data connection, but I pay for both.
Yeah.
I pay for both.
If you're a broker, I don't know, some futures brokers, you have to like get the data separately. But if you get it with your broker, you don't have to get it with TradingView. You just sync your account.
Yeah, correct.
And
yeah,
even if you're paper trading, you can still use.
Yeah, it's $4. It's $4 a month for Ninja Trader CME, the package. So it's totally reasonable. And that's $7 for the multiple package CME on TradingView a month. So it's not gonna. It's very reasonable. Like I said, $36 a year for individual NYSE, ARCA, and NASDAQ. Those are the major ones you want. You don't want OTC and all the rest of this garbage. Just get the major ones so you can watch Tesla and Microsoft and Meta and all that.
Yeah. Well, that makes sense. Totally worth it. Keep an eye on all these things. I actually am interested in these tick charts and footprint charts, so I'm gonna probably just end up getting that version of it and see what happens. It seems like a smooth platform, easy to use, and also easy on the phone. Much easier than Ninja that I'm using at the moment. So
yeah, TradingView is way better than Ninja as far as charting. Just as execution, Ninja is good. It's a little faster than TradingView, but for charts and whatnot. And if you don't need fast execution, you're fine. It's just the charting on Tradevate is terrible, but it's really old. But Ninja Trader is a bit faster and newer. But TradingView is definitely top of the line. They got it.
Yeah, now that's a good point. For execution, basically you want direct access. That's when you need DOS. That's what it's really good for. It's already, it's on the market. Even a limit order you put on it, you don't have to worry about connections or anything. It's already on the market. So if you're really scalping and being super fast and hyper about it, then NinjaTrader and TradingView won't work. It'll be DOS that you need. That's what I used to do again with the options market. I really needed that. But it's only necessary if you're doing that kind of thing. Otherwise, yeah, don't worry about it. I think TradingView is just fine for most people, for most kinds of trading. Works all right. So, got a hot mic, Nassim. Lots of noise coming through.
Sorry.
All right. What do we got here? Okay, guys, got info on connection data. All right. Your wife is scared of Dubai, Al?
Mine too.
Did I just... You're funny. You guys are hilarious. All right, let's get into a few little things here. What do we have? Earlier today's price action, this was the open area. You can see lower highs led to a breakthrough of support. This is a 30-minute chart on the MES. Broke through that support as well. Straight to the bottom. Here's your target area. Another one here where the buyers were. Another one here where the buyers were. And down here as well. So a fun day if you were able to catch the breakout. Makes sense. Looking a little further back, you'd see this over here where the price was in this consolidation zone, a bit wide, but it broke down. And here it put in this hammer. And this is an interesting one. Let's zoom into it a little. Right there. See that hammer? It's a good setup for a reversal. Oh, come on. Man, all this AI stuff. Sorry. So yeah, breakdown. Now this hammer happened. If you're looking at it this way, to me, this is not a good setup for a reversal. But then when this one happened, this is a good setup for a reversal. There's a big difference in these two. Let's say you have a big level somewhere in this area. What do you guys think? Why is it that this one is a better setup than the first hammer? Any clues?
There's wicks on the previous 3 candles, 2 candles.
There are wicks. Okay.
Yeah, buying pressure on the wicks.
Well, that's kind of there. Yeah, I see that, but that's not precisely what I tend to look at in this situation. Any other guesses? The Avi hammer finishes green or white, Brian. It is on the reference level. Let's just consider we have a level here, Winston. Then it's just in consolidation, retry prior. Yeah, that's better. That's closer. Dennis got closer. To put it very simply, look at this one here. This has been straight down. This is still a very bearish candle. It's a bit of a giant bearish candle right here. And then a hammer. You don't trust that after a very large move down, suddenly it's reversing. You don't trust a hammer right after a big bearish candle like that. But if you look at when the next hammer happened, here, it happened after not a bearish candle. It's a tiny body and it's more indecision than anything else. That's why you trust it. Sure enough, that's when it went. Very simple clue there. And it's all about context. This thing is going down and suddenly you think it's going to do a V reversal and go that way? First, the behavior has to change. As in it's come down, it starts to slow its movement down. So it has these small candles, not these big giant candles going down here like you had earlier. And then the hammer with room to the left. And then the new high would be your entry and off you go. So that's how that price action works. And to zoom out, to look to the left, you want to make sure you got a level in this area. If you look to the left, you have it right there. You can see this wick where the price was up here, it came down and turned around. You put a level pretty much there. And this reversal is happening in that area. So I mean, you take one trade like this in a week and that's all you ever need to do. It's not very complicated. And this is a 30-minute chart. You can actually take this on a 30-minute. If you're getting the new high, the entry on the new high, you can stop below it or maybe below one of these wicks. And your targets are in these zones over here. Now, these setups do happen on a 30-minute and you can catch them. They're not as often as most people are used to when it comes to day trading. Everyone's used to 5 setups a day. This, you might get 2 setups a week. and all you got to do is catch one of them or two of them, maybe stop out once and then re-enter, things like that. It's fairly straightforward. These are the kinds of big setups that I'm really looking to catch right here. Very, very simple. Now look at this real-time action that we have right now. If you're looking at 30-minute setups and you like such things, we had the activity was all bearish, and then it's pulled up and it's been consolidating. Does anyone see a setup right about now in this zone? And we'll look to the left a little bit as well for levels. What do you guys think? Is there anything happening here?
I actually tried to go short here on the. You see that second hammer after that huge green candle.
This reverse hammer?
No, the one right before that. So like
Okay.
I was too early. I tried to go short here.
Okay. Yeah, that's tricky.
Well,
Well,
stopped out.
yeah. You see, let's look at it this way. This thing is all bearish, right?
Yeah.
And then it's just done a retracement and it's consolidating. Now on a 1-minute chart, this is a reversal. It's going bullish. On a 30-minute, it's just in a bearish mode. So bearish and then pull up, consolidate, continue its way, because that's what the market does. And I make the assumption the market's going to continue doing what it's doing. So the move is bearish. This is your consolidation before it continues bearish. And the confirmation that I have of this idea is this reverse hammer that just happened half an hour ago on the previous candle. You got room to the left. It's popped out of this consolidation, right? And then the entry would be the new low, which may have been just a few minutes ago with a stop above it. And you let it sit and let it go. And if you stop out, no big deal. It was worth it. Because if it goes even just to the previous low, you're still getting beyond 5 hour or whatever it is.
Yeah.
So these are the setups to look for.
And your target would be around 68.90.
Yeah, just about here would be the first major target. And major, I mean, this is where I think if I was to go in here, I'd probably take off 80% of the position. And then if it continues, if it wants to do a breakout retest to the downside, then I can add back in and let it continue. And this whole thing could take hours. The market just opened a few hours ago. I mean, we still have, what, 20 hours for this thing before the market closes again. So you have so much time to let it just run and do its thing. Another key point that I like to look at is when you do see a setup is look to the left and see if that is an area where you could possibly have a level. And sure enough, right about here, look at this. It was grinding up, consolidation before the big buyer stepped in at the open a couple of days ago at the New York Open, just about 9:30. So this is an interesting area right here, where it's sitting right now. So you could have some activity here. So again, this is purely just a 30-minute chart, nothing more. If you want to make it very simple, just look at 30-minute charts. It's not too difficult. You can just do this. 1 minute will give you more precise entries, but more stop outs as well. Let's look at the cues. Same idea. This thing came down. You have the hammer here after not a giant candle, a little room to the left there. And big bullish activity. And up here you had lower highs, which led to the breakout of the support here and here and even here. Catch one of those entries. You're on your way to take profits down here. You can tell where all the buying wicks are. Just take profits in those areas. And now it's been bearish. It's pulled back up. It's in this consolidation. And it's put in this reverse hammer. But this is not one that I would trust for the continued move down. Because look at the top of the wick to begin with. It's not popped out of the consolidation. It hasn't made a new high on the wick. It's still below this previous wick. So it's pretty much no room to the left. It's in this consolidation. Also, the wick is not large enough. It's not 3 times of the body. So it's not one I trust. For me, this is just chop. And there's no signal that it's going to continue down. Not yet, at least. So tiny difference. And so this one I would not touch. But the MES, yeah, this one looks like a reverse ABCD. MNQ, it does not. And so that's what keeps me out of these situations. Let's see, Russell, what do we have? This is just a mess. We were looking at this at the Open, the New York Open. Great big mess. What you may be able to see is lower highs, which may have triggered you to look at a breakdown when it happened in this area. You can see the support. And if you look into the 1 minute chart in this area, maybe find a reverse ABC. And off you go. That would have been one setup. A little later, around what, 12:30 or so. And this one's just come right back into where it broke out from. Well, this is interesting. Look at this. So you see it had this big consolidation breakout. It's come back into where it was consolidating. Now here, it has put in that reverse hammer, that bearish signal for a move down. But this is not a continuation, where it's going to continue down. This, the way I see this, is it's broken out and it just come right back into the consolidation. If this whole setup, this consolidation with the reverse hammer happened, let's say down in this area, then I'd say, all right, it's made a move down. It's just pulled back a little, it's consolidating and continues down. This one, it broke out and it went right back to where it broke out from, and it's sitting there. So again, this one, I wouldn't trust it. Very different from the MES setup here, where you can see where the breakout was here. This is the consolidation. Here's a breakout, right? Here's your pullback. This one you can trust more than you can the Russell 2000. So these are the subtle differences, and just helps you stay out of crappy positions. What do you got here, Winston? Still on the pivot level? I don't know what pivot levels are. I mean, I don't have them on my chart, but the way I identify pivot levels is just looking to the left and seeing if there's a level. You can see this is pretty obvious. Big turnaround points. Yeah, this is an area where you might be interested in a setup if you see a setup. And it happened over here earlier. I don't see anything up here at the moment. Let's look at oil. Oil's been a mess, great big mess. Look at this. You don't touch this, right? Room to the left, none of that. You could think of this as resistance, breakout, but very difficult to trade this. It's got wicks on both sides, every candle. Don't know how you would trade this one. You can see this as a bullish engulfing, not a setup I tend to like. A lot of people like it. I don't like it. Let's see if it wants to go. Gold. Oh, look at that. Gold, you had this resistance just recently. Seems to want to break out just now in the last couple of hours. Something to look at. And this had these higher lows in it. Let's get into this. See, during this consolidation, there's a low, a higher low, which led to the breakout. There's your resistance. It led to the breakout. If you had the 1 minute chart open maybe 2 hours ago, you'd be perhaps interested in getting this breakout zone here. And silver, wow, we were talking about silver earlier during the New York Open and saying, wait for it to break out of this resistance. And it never did. It just dropped from there. And then it put in higher lows down here. Yeah, but overall, it's just a choppy zone. Again, I'd wait for it to break out of here. This is your area of resistance. Put an alert there if you like. Let it get there. And if you're getting a good setup to break out, there you go. As you can see, there's room to the left in this area. Traded in this zone, it's just choppy. But up here, it's more likely to be clean. So just wait for it to move away. It's pretty simple, Just look to the left. You get most of the information you need just by looking to the left.
Yeah, I'll definitely go to that 100, 103 area at some point before dropping again, maybe. I don't know.
But that's the thing about short-term trading, right? Is you got to time it. When is it going to hit 100, 103? You want to enter an hour before that. And or just wait for some other news announcement on Iran or Venezuela or something. Makes the entire market want to move. More warmongering news.
Yeah, it's either you want to play it to the upside from 90 to 103, or you're gonna wait at 103 and then play short, and that could be actually bigger RBR.
Yeah, it could be. But let's say you have the idea it's 103 is going to be short. And it's sitting down here now below 90. Then when it gets to 103, where's that, about here? What makes you think it's not going to continue to 120?
Oh, there's no guarantee. I'm just saying that You set the alert, and then you look at the setup. If the setup is there, you take it. If not, you
Yeah,
might actually take it to the upside. You don't, you never know. It might go to
exactly.
120 again.
Mhm. Yeah, that's the key point. That's the tricky point about having a bias before it even gets to a level. If you have a bias, you got to be so aware of it. And this is the whole psychology side of trading. You got to be so aware of any bias that you have. You got to let price action dictate what direction you take the trade, or even if you take a trade. And if you're having a bias, be aware of it so you don't fall for it.
Yeah.
You got to let price action make your decision. This is a real problem. A lot of people like to trade with a bias in mind, and I think there's a place for that. But you got to be super, super careful with it. Super careful, unless you got plenty of experience doing this. You want to be careful about having a bias. Let your indicators tell you, what to do with it, more than a bias that you had 3 days ago. You think, oh, oil is going to go up. The S&P 500 is going to go up. It's not going to. If you had that bias a few days ago, look at this thing's going up. And sure enough, we've had this massive downturn. Yesterday would have been a blow up day if you kept trying to go long, because you have this bias to go long, and this thing just kept dropping. You would have had an absolute blow up. So these are how these blow ups happen. Be very careful with biases. Again, try and use real-time indicators as an actual price action. That's the only real-time indicator. All the other indicators are telling you about the past, moving averages and such things, telling you what happened in the past. The only thing that's telling you what's happening right now is actually the movement on the price right now, or to be more precise, reading the tape. If you like to read the tape, I just look at candlesticks. And the future indicator, the only one I know of that's kind of useful, is the level 2. Excuse me, is the order book, the level 2, if you like to use it. But really, real time in the present tense, that's the one that matters the most. So that's the 80-20 of it. Yeah, Mohit, go ahead.
Hey, Abby. So you just talked about the gold opportunity that we had just a couple of hours back. So I was watching gold break out of that resistance zone on the 30-minute chart, and on the 1-minute chart I entered. Should I share my screen?
Yeah, please do.
Okay.
I got Winston in here also asking about gold. Gold is asking for short, red engulfing first scan. Okay, we'll get into gold right now, Winston. See what Mohit's got going on here. All right, there we go. I see your screen.
All right. So this is on TradingView Sim Trade. This was the resistance zone right there. It broke through right here. It gave me a retest, and on the new higher print, that's where I entered right here. With my stop loss right below this retest zone. It made this weird candle, but it never stopped me out for some reason. It went in my favor. This dotted line was my first partial. I took a little early once it made this hammer kind of candle, and I brought my stop loss to break even, and it stopped me out right here on this first dip down, and then it carried on. Just wanted to confirm, like at what level do you basically bring your stop loss to break even? Do you follow like in terms of a risk to reward 1:3, 1:2? Because this was for me almost 1:2 initially from here to here.
Yeah, I see it. Well, as far as moving a stop to break even is concerned, I don't use when I'm actively watching it, I don't use any RVR calculation. I just watch and make sure that the price has departed the area and retested the area, now continuing on its way. So the price has got momentum as it's moving. And then all I do is I trail the price. I trail it up to the point where the stop's at break even. That's a little tricky, but the simple way to do that, if you really want to trail the price in a very easy way, is trail it using a moving average. So using like some sort of exponential moving average of probably the 20 would make sense. Be very simple.
I have
And you
this
can have all the settings.
13 EMA right here, this yellow.
Oh, okay, I see it now. Yeah, sure. So if you like the 13, you can use that and have the setting so that your stop loss just trails that 13 EMA up to the point where the stop loss is at break even. And then just
Okay.
leave it there. Don't let it trail it beyond the break even. And then you stand a chance to stay in it if it goes further, pulls back and goes further. So that's the easy way. That's where I think moving averages are actually somewhat useful. It's just for trailing the price. I think they're really tricky when it comes to entering positions. I've never been able to use them effectively.
Mhm.
So
if,
yeah, there you go.
If you were in my position here and the trade went from here till here, would you also put your stop loss to break even or somewhere near?
Yeah, looks like I would have. See, as you entered, and then it went and made a tiny resistance, like what, 2 candles after you entered. Then after that big red hammer, that should have stopped you, but then it broke out of that high, right? And a few minutes after that, once it broke out of that next high, that's probably the point where I would bring my stop to break even, most likely. As in looking at your entry, that's about where I would put the stop, most likely. And yeah, it would have taken that target and then the rest out of break even.
All right. Savvy.
I wonder what it looks like in 30 minutes, if you don't mind putting the 30-minute candles.
Yeah, so you're looking at breaking through that resistance we were talking about, and yeah, on its way.
And this was the first target. Exactly, that's where it's now coming back.
Now here's an interesting point. Just leave it here on this 30-minute chart. You have that resistance well defined where it's supposed to break out from. It's an obvious wick further down, further to the left. Anyways, we can see that resistance was breaking out from. Now, what's interesting is to enter without the 1-minute chart. That's also an idea. We were just talking about that a little while ago. If you enter on a 30-minute chart when it prints a new high in this situation, and in this situation, I mean, there's a consolidation with higher lows leading to the breakout zone. So it hits the breakout zone. After these higher lows, it prints a new high, you enter, and your stop is below your entry candle, the 30-minute entry candle. So it's a very wide stop in this case, right? And if that was the case, you would actually probably still be in it. And of course, the target will be much further out. So you have a smaller position, you're targeting a bigger move. Now you're using more of a swing trading mindset. It's a different way of thinking. And typically with this kind of mindset, you catch bigger moves. And they take longer to occur. They're smaller size, so you're not too fussed about the fluctuations. And for some people, or for a lot of people, psychologically, that's just an easier way to trade. Much, much simpler. So think about that. If you're struggling with the 1-minute stuff or the 5-minute stuff, and it's too fast for you, and getting a lot of stop outs, and win rate's not great, you can always just trade on a bigger time frame. Just go bigger. And with the futures market, that's available. You don't have a limitation to 6 hours. It's a 23-hour market. And for you guys in North America, 23 hours is ends at 5 p.m. Eastern, and the market opens again at 6 p.m. Eastern. So if you want, just close your position at 5 p.m. or right before the market closes. Come back an hour later when the market opens at 6 p.m. And if the price is still in the same place, whereas it opens in the same place it closed, just put the position right back on and let it continue. So it's quite literally a perpetual market. You never have to get excited about the 1-minute chart, ever. You know, I like that. For me, 5 p.m. in Eastern is what, 2 a.m. or something. So I struggle to do that. But you know, it's a very simple way to go with these futures and commodities and stuff. And you can really capture huge moves, huge moves. So think about that. It's a good way to go.
Oh, we are.
Yeah, I've been exploring it. You know, for this reason, I might move to Costa Rica or someplace just so I can trade this time zone. The market closing.
Should I stop sharing?
No, keep sharing unless you got something else to share with us. Share your insights.
So there must be so right now it looks like a consolidation, right, at that zone.
Yeah, it slowed down a little bit, hanging around there. Yep.
Yeah. So like you could have almost used the what is it called, the moving average here. What is that moving average that you have going?
That's 13 EMA.
Right. So if you use that moving average, you would have still be in the trade.
Right.
Yeah, and the target could have been at 51.50 or something, right? That's the next target, I'm guessing.
That's the next target, yeah.
Yeah, I'm pretty sure it will go there.
Now, Winston's asking here on this particular chart, MGC 30-minute, is that a bearish engulfing that just occurred, the previous candle? What do you guys think?
No, it's not.
Yeah, it's not. It's definitely not.
It's definitely not engulfing, because it's not engulfing the previous candle.
Yeah, it's got to completely engulf. You know, engulfing is huge. You got to make sure that if you look at, well, just think of it this way. You're looking at a bearish engulfing here. Firstly, what you want is for the bearish wick to be above the high of the previous candle. And then you want the close, the bearish close, to be significantly lower. You want it to be like twice the distance of the previous candle. So an absolute tremendous engulfing. Then you got an engulfing. The problem with those is by the time you get it, the RVR is just no good. That's why I can't really trade these. It's really tricky to get good RVR. And also I find them not always reliable, not as reliable as hammers, basically. And also in these engulfings, you want them to be, ideally they are reversal scenarios. So it goes up and then you have a big bearish engulfing and it goes down. So that's the context of it. So overall, engulfings are something I don't find reliable. I haven't been able to use them effectively, so I don't bother with them.
Also, if I look at the engulfing, if I see the engulfing, I want to see the volume on that candle. If I don't see the volume, like I don't trust it that much.
Yeah, that's a good point. If you like volume, you want it to have a tremendous amount of volume, like twice the volume of the previous candle. Then you got something. Where's Evo? Is he in here? He's supposed to do us a webinar on volume. I'm gonna harass him soon.
Yeah, I'm at the Habit Burger in San Marcos, so I thought I would tune in. But definitely, yeah, if you see an engulfing or a hammer, definitely I'm looking for a volume profile that tells me that the buyers are stepping in and it's about to reverse trend.
There you go. Thanks, Evo. Awesome. There you go. Volume.
Let's go North County.
Evo, let me know when you're ready to share your volume stuff. We're all excited to hear about that. I'm not talking about volume anymore. I'm done. All right, what we got here, Winston? ATR for stop loss. What is that? And what is TSL to entry price? I don't know what you're typing here, Winston. I can't, I don't read code. Use a mic if you need to. All right, fine.
Yeah. Stop loss is TSL?
I don't know what TSL is. TSL to entry price. I don't know.
Oh, trailing stop loss.
There we go. Trailing stop. Yes. Sorry. Trailing stop up to the entry price. Yes, that's what I was talking about. Yes, thank you. Thanks for clearing that up, Asim. Yeah, I like to trail the price until the stop is at break even, and then you're risk free after that, right? You can't lose. Either you stop out with no loss or you have a massive winner. So it's mostly just two scenarios. So that works for me. All right.
Well, for some reason, never like trailing stop never works for me.
Yeah. It's a tricky one. But again, if you're having a hard time with trailing stops, just pick a moving average that makes sense to you and use the setting to trail the moving average. NinjaTrader has that setting. I'm sure TradingView has it. Most software has it. Sometimes you can, if you want, you can actually just trail it all the way. No, don't have a target in mind. Just trail the moving average and you'll exit at some point. And that's it. Simple way of managing a trade. I know people who do that. And it works. I don't like it so much though. Doesn't suit me. Not these days. All right. Hey Mohit, since you've got your TradingView thing up here,
Mhm.
you want to share with us real quick how you enter these orders on TradingView, and you place a stop and a target? Are these OCO orders, range orders? Since we got a few people in here
These
curious
I
about TradingView, and I am too. So, share a
so
little
because
bit.
I'm on still so that's this is the button for trade, entering a trade. Just market order. So you can select buy or sell from the top, market limit stop. I'm just doing 1 unit at this point. And then because I'm doing sim, so it is easier for me just to enter without having a take profit or stop loss right here at the time of putting in the trade. Once I buy, I can manage that later as well because I'm on sim right now. But when I do it live, interactive broker doesn't allow TradingView to do that. So you have to, I think, enter your stop loss at the time you enter the trade.
Really?
So that's
Wow.
one issue. I mean,
Yeah,
like
That's bizarre.
that's the most annoying thing about TradingView.
so like right now, if I enter without putting anything, like no take profit, no stop loss, if I just enter one, so I can easily from here click on the SL button and drag my stop loss right there, and then
Mhm.
hit confirm, and then similarly take profit up somewhere here, and then confirm.
Mhm.
So this is only on when I'm trading sim. But when I go live using Interactive Broker as my broker, it doesn't allow me to do all this for some
Wow.
reason.
That is really strange, huh? Oh
Yeah,
man.
they say that Interactive Broker doesn't allow them, have not given them permission to allow us to do that. But I know some other brokers do allow them. So it depends on which broker you are using.
Yeah, it's
But
different with NinjaTrader.
It's different with
uh,
Ninja.
Yeah, with Tradeovate and Ninja, you don't have to deal with that. You can do whatever you want.
Wow. Okay. Well, that's interesting. Oh, I should have sorted that out. Cool. Thanks for that insight. Very interesting. And when you put in these range orders, the stop and the take profit, can you do partial orders? Like
I
you have
think you
100?
can because it says here, right here, add level. So if you add a level, then you can put more. I think I've never tried doing this.
Okay.
Yeah, see, it's take profit one is right here. Now you add another.
Okay.
That's take profit number two.
Got it.
So it'll keep adding, I think, and then you confirm. Okay, I have no idea what happened.
You guys said
Uh,
Tradeovate allows you to do this?
I think
So what
Oliver
is
said yes. Yeah.
Tradeovate?
I was not restricted when I used Tradeovate, TradingView with Tradeovate and Ninja. There was no restrictions like IB.
Okay, I've tried it with Tradeovate and I wasn't able to do that either.
You were
I've
restricted
only-
on it?
Yeah, I wasn't able to do this drag your stop loss and add a take profit. So I'll try it again and see if it
Yeah,
works.
try it again. I haven't been on it since I think last year because I got away from TradingView executions. I just used Ninja for my platform. It doesn't have the execution execution window because I'm used to like Lightspeed. You know Lightspeed is. It's
Yeah.
more, yeah. I'm so that I like to see the bid and ask. I don't like to trade on the chart, so I trade from a panel. But when I did use it, it let me do it, but it could be different now. But that was, I think, last year when I used it. And the
Yeah.
executions on TradingView is slower because they're not direct access. I'm NinjaTrader is not either, but I know IB and Sterling or Lightspeed were direct access, but you got to pay for that. But so TradingView, Ninja, they're slower. But the way that Avi wants us, we're learning from Avi to trade is we don't need necessarily that quick execution because we're going to be letting them go for longer. So as long as we get in that range, we're fine.
Yeah. Yeah, for this style of trading, especially the way I'm trying to do it, is you don't need the speed. Actually, the speed is more triggering than anything else. I prefer when the candlesticks look like screenshots.
Yeah, I'm trying to pull away from that too, and just been so deep into it, trying to get out of it.
Yeah, yeah, makes sense. What I'm trying to figure out here with trading views, are these OCO orders when you have different take profits, let's say 3 different take profits levels, it hits 1, does it then cancel that amount from the stop loss?
Yeah, if you do it with the add level, it
Mhm.
will. The
Well,
way he
okay.
showed us, when you add
Oh.
level, it'll cancel the stop loss.
Okay, good. That's pretty much the only feature I really need when I trade. Not much else. That works.
But I feel like by the time you enter all of that, candle's gone, you know? It could be gone or it could also not be gone.
Well, the thing is, you can enter and then after putting on the position, then you can put your stop loss and profit points in, right? And of course, know where your stop is before you enter. Okay. And then once you enter, then you type it in. That's the way I figure we can do it. Ninja has that. DOS has that. Fairly straightforward.
Yeah, I've tried it with Tradeovate and you can't do that, unfortunately. So like you have to do it when you, like you said, when you enter into the trade. Which is kind of annoying.
Okay. Well, depends on what kind of entries you use as well. But like you said, if you're trying to get that fast entry, then it's gone. That's a different world. All right. Cool. Anyways, just platform stuff. We can work this out. Not the most difficult thing in the world. We got Winston asking about Thinkorswim first trigger sequence. I don't know anything about Thinkorswim. Who in here uses this Thinkorswim? Brian, you in here use Thinkorswim? I have no idea how that works. Never tried it. Brian's busy making. Yes, Sahil, go ahead.
Hey, Avi. I want to review a trade. So can I share the screen?
Yeah, go ahead.
Can you hear me?
Yeah, gotcha.
This one.
Brian, you gotta stop switching microphones every few hours, man. It messes
What do you
everything
mean? I got 7 pairs of AirPods and a plug-in.
up. Oh, man. Yeah.
I mean, so for Thinkorswim, using it with the options, you have the active trader. I don't have it pulled up, but like an active trader ladder. I really enjoy that because you can go in and set. It's kind of like how Ninja is, where you set your strategy or whatever. How many ever points of a stop loss and how many targets, and like you break the targets up into how far you want to go. But once you're in there, you can just click and drag them. So I mean it's the reason I still use Thinkorswim is because the type of trading I've been doing for the last little bit with options doesn't require me to be instantly in right now, because you want it to run a little bit anyway. So, and it's free. I mean, free commissions. So not free, but 65 cents. I think I'm at 50 cents right now, actually. So
All right. That's interesting. Thanks. Yeah. There you go, guys. Execution is slightly different on different platforms. Make sure you get the details right before you go live. That's important. But Thinkorswim is useful for options for sure. And again, I think the only platform that's truly built for getting in and out quickly within seconds or minutes is DOS, the only one that I know. And so if you are trading that style, that ultra fast, hyperactive, degenerate loser, then yeah, go use DOS. Otherwise, there's so many easier ways to do things.
Another benefit, Avi, you kind of stepped in on a conversation we were having about some different option strategies. We were working kind of in the Discord chat last couple of weeks. Another benefit to Thinkorswim is some of the analytical tools that comes with it for free. So it's not like you have to go pay for some other, application to look to see what strategies you're going to do. I mean, it's very detailed in how you can like measure risk with option strategies.
Awesome. Thanks, Brian. Good stuff. All right, Sahel, we got your screen up here. What are we looking at? I think I'm going to enter a short real quick here on the MES. Sim trade. I'll just put that on. There we go. All right, go ahead, Sahel.
Yeah, these are some trades from yesterday. So the first one was 1 minute entry. There you go. So I was looking on 30-minute and it broke my level and I had an alert on it. And I guess I chased it the first time. I didn't let it complete the retest. Or do you think this was the first retest that occurred here? Or it could have been avoided? Because I had this stop on this one just above area and I got stopped out.
Yeah, now you're saying that's your level, right? That dash line.
Yeah.
Now here's the thing. To have a retest, you have to have a breakout. To have a breakout, you have to have a consolidation. So look at it before it did the breakout. Was there a consolidation right before the breakout on your 1 minute chart? I don't see it.
No consolidation. No.
So breakout, retest, all that's invalid.
Okay.
So this 1 minute picture, there's no entry the way I see it.
So I got stopped out here. That was fine. Then I was looking at the 5 minute later on. And it broke down again. And before breaking it, it made this two inverted hammers. But it was after this reverse hammer over here. Would you trust this kind of setup? Just after this hammer and it made a reverse hammer.
Yeah. Now I would trust the reverse hammer. The key
Because-
thing that
previous direction was bearish and broke the level.
Yeah. So it's bearish. It broke the level. It's making lower highs. And if you look at the reverse hammer that you're looking at for your entry, there's room to the left on it. Compared to just previously the bullish hammer, there's no room to the left.
Okay.
See it? It's just
Yeah.
going up, pulled down, and went back up. And it's just, there's no room to the left. The room to the left is incredibly powerful. You can see it right here.
So I saw these two hammers and I entered when it broke below. So right here.
Yeah, I see it. It looks all right. That
Yeah.
entry's okay.
I entered little more shares, 10 more. It was just a small position. And at the close, it did not hit my target. So my target was here, 38. So on a 30-minute, it was just here.
Okay.
This area.
You close.
Yeah, so I closed it 10 minutes before the close. Over here, I was at the gym. I was looking on the phone. So over here. So my question is, do you recommend holding it overnight because I did not retested my area, or should I keep 20% of the position or close 80 next time?
I've never done this overnight thing on these stocks like MSTR. Oh man, no way. The behavior is totally different. Once the market closes at 4 p.m. Eastern, the behavior changes completely, and you gotta watch that overnight risk. And you don't have market orders; you have to hit limit orders, I believe, to stop out.
Yeah.
It's just more complicated. There's so much risk with the news and various things. So you want to get into swing trading like that, you gotta embrace all those different risks and then put on your position and your stop accordingly. So it is a bit complex to turn a day trade into a swing trade. It can be done. It's not something I've really explored. I haven't been bothered with it. If you want to do stuff like this, go into the futures market, which is much more stable as the market closes and opens and all that. This is just too risky.
Yeah. All right.
Mhm.
Yeah, it hit my target on the next day. Anyways, so this was for today. I had 2 stops here. I was let's see, it was on 1 minute as well. So same as like the same as the previous day, right? So no consolidation. It just broke and retested. I got stopped out here. Yeah, because of slippage. Then I waited and put my alert on 30-minute just below these candles.
Yeah.
Once it broke, then I re-entered here.
This re-entry of yours right here, just look to the left. Was there a previous low of day right in that area? Yeah, just about. Just above it. There you go. So you can see it broke out and consolidated after the breakout. You can't even call it a retest, just kind of consolidated. Then a breakout again, a big old reverse ABCD pattern. That makes sense.
Yeah.
That entry looks like the most convincing.
Yeah, then I'm adding more here. And these 2 targets.
Yeah.
And this was okay. It was fine.
Yeah.
But the thing is, I want to capture these kind of moves, but the market closes too early.
Yeah.
I was not wrong in this one. There are a few more trades. So much left on the table. So this is it's thing I'm struggling with.
Well, here's the thing, these are MSTR and these what I call exotic tickers. The thing is, when they're in play, they just move, and you don't often get the retest to work. They get volatile at the open. Usually, it's an ORB kind of setup, and you scalp it. Sometimes you get into a trend like in this one, but it's not common when you have a catalyst and a gap and all that stuff. If you really want to catch things that truly set up a bigger picture consolidation, then a massive breakout, then the big old retest, and get into a firm trend that goes for hours, usually you don't want something with a catalyst. Usually it's the bigger indexes or some of the things that are usually in play, like NVIDIA, without the catalyst. And I've traded these retests for years. And it's funny, when I did trade the Mag 7, it's when there was a catalyst on those that I avoided those tickers. The one that had a catalyst, I wouldn't trade. Let's trade the others. So in this case, you're trading these exotic tickers with catalysts. You just literally got to enter at the breakout and don't bother with a retest because it often doesn't happen. So you got to know what you're getting into here. These kinds of trends are unusual. What you're seeing on your screen right now, yeah, you want to catch it. I get it. I like to catch these too, but they're not normal. You can sit here for months and months waiting for one of these. Yeah, so keep those things in mind.
Yeah, these were the 2 days I traded this one, never before. So, yeah, this is a crazy ticker.
Yeah. There's easier ways for you to lose money than to go behind this stuff, man. So.
Yeah, this is what I was just struggling with. All right, thank you, Avi.
Yeah, sure. No worries. What else we got in here in the chat? Yeah, not with Trump in office. Oh, what are you talking about? Holding overnight?
Yeah. You said you're gonna take a trade on ES.
Yeah, I put it on the third.
Yeah, I mean, what's the situation there? Like, there's nothing but room to the left. Like, there's no room to the left.
Is that what you see? All right. Here's
that's if I understand what you're saying, it's just a bunch of chop.
Yeah,
so it is
a bunch of chop.
Yeah,
it is a bunch of chop. And then if you look at this reverse hammer in the context of it's been in a downtrend and it's just a pullback during consolidation and put in a reverse hammer, which is a signal that it could continue the direction that it's been doing. And so then the new low is the entry. So that's where I got this entry. And the stop is above it and the target's further down. That's just a sim trade, just a very simple pattern. And it's worth the risk because if he gets there, and on the entry, it's what, 3-1, I believe. But if it starts to move, especially if it breaks down from this support area, gets into this area, I'm moving that stop into break even very quickly. No partials yet, just move to break even quick. And then you have it all risk-free to try and get to down in that area. Again, this is purely the 30-minute chart. I haven't looked at the 1 minute. I'm just experimenting with these entries on the 30-minute. Yeah, you got plenty of hours to let it run. If it gets up above this wick, that's it. That's the stop out. So that's it. Just a simple setup. Let's see if it works. I think we saw a better one on gold. Did we see something? I think we saw an even better one of these somewhere earlier. I don't remember. I don't know. Well, silver, you wait for the breakout to get up over there. Anyways, yeah, that's what I'm saying. What do we got here? Evo, no stop limit orders and after hours. Yeah, that's the way I understand it. I've almost never traded after hours. You got to use just limit orders to enter and exit. If I get it, is that correct? Do you guys know better? Anyone here trade after hours, regular tickers? I don't really know how it works. I have no experience with it. It's too risky. Yes, it is.
Abby, would you please take a look at gold, please?
Yeah. Gold, here it is. What do you need to see? What are you seeing?
After breakout, I see a consolidation here.
Okay, so is this the breakout level? Right
Yeah.
about here.
Exactly. And
Consolidating here. Yep.
yeah, I think it needs to take a second leg.
Mm-hmm. Well, it doesn't need to, but it could. Yes. Again, another breakout.
Oh, another breakout, yeah.
Yeah. So this is interesting. To catch this breakout, we were just talking about it. To catch it on a 30-minute only, this would be your level. So you would enter after you're seeing the consolidation, you identify the breakout level, you're seeing higher lows. At the top of this candle is where you would enter if you're using a 30-minute chart. Once it prints a new high in this context, with the stop below the entry candle. And then the next candle came down, pulls back, pulls up, and firmly completes the breakout. Then you move your stop in. After this candle closes, you move your stop into below this big bullish candle. The next candle also continues, makes a new high, generally more bullish. You move the stop in to below this candle right here, below the wick. And you can see the stop and the entry are now very close. Already now, the way it's sitting right now, it would be looking something like 5-1, and you still haven't hit a target yet. And you're just on your way. So that's how I would look at this on a 30-minute chart, just purely trading a 30-minute. But let's look at the 1 minute, see how that would be. We're looking at 50, 20-ish. Let's look at the 1 minute. Here's your breakout, is it? Oh yeah, here's your level. Let's zoom in so we can get a better perspective. Here's the resistance level. Here now on the 1 minute, you can see these higher lows leading up to the breakout zone, but no real consolidation before the breakout. You would struggle to play with it. Comes back down and it bounces off of this smaller resistance area, a little lower. So you may be interested after this first white candle, maybe get in, or maybe after it prints a new high. So in this area, perhaps is your entry with your stop down here. And it goes, and this looks like a bad print and may not stop getting. Who was it? Mohit, I think, was showing us his trade and it didn't stop him. Maybe he would have stopped, maybe he wouldn't. This looks like just a bad print. And so that would be the entry, the stop below here. And let's see, once it prints again a new high off of this resistance, it gets a new high over there. That's when I'd bring the stop into below this wick, right about in this area most likely. Continues going, here's your consolidation, and then it goes. And from here, I'd most likely bring it into the break-even zone. You would have survived this pullback and you'd still be sitting in it. So yeah, that's how I would manage this on a 1 minute. So you have more of a risk of getting stopped out on a 1 minute, of course, we all know this. But yeah, there's ways to enter this. There are multiple ways to enter this.
Okay, here in the consolidation zone, do we need to check for the retest or no?
Which consolidation? Down here? What are you talking about?
Yeah, in 30 minutes.
30 minutes. Yeah, on the 30-minute, when I'm seeing a setup like this, where the consolidation is so good that it's leading to a neat breakout, and also, of course, you want to have a neat breakout level, which is, this is very obvious, and with the higher lows leading up to the breakout, I don't bother too much with the retest. With a 30-minute chart, you enter, and the stop is always going to be wide on a 30-minute. And so let it bounce around, retest, whatever. You're not bothered, let it run. But that's a 30-minute chart. On a 1-minute chart, I almost never enter without a retest. 1 minute, it's very different. You know, you just take more risk basically. So yeah, I don't bother with the retest too often on a 30-minute. If you do get a retest on a 30-minute, that's great. You can even add more at that point. It looks like the breakout is close to happening now on this 30-minute chart right now. So if you believe this is your breakout level, and let's see, this consolidation actually is pretty good. It's all higher lows. And there you go, printed a new high. So let's do this in the sim. Buy that. So enter the position as it just printed a new high. The stop is below the entry candle. So let's put it over here. Stop. There we go. All right, that's it. You're in this trade. And then your targets are way overhead, somewhere in this area. Targets here and here. These are where sellers were sitting. That's how I would trade this on a 30-minute without looking at the 1 minute. It's just straightforward and simple. And what I'm curious about with this kind of trading on 30-minute charts is actually I'm curious about the footprint charts. I think there's a potential to be able to trade this 30-minute style using footprint charts because you're getting the insights of what's going on inside the candles, buyers and sellers, and where they stepped in, where they were bigger, all that stuff. So there you go. That's how I would do this. Cool. What else we got here? People, remember my watch list day after day Mag 7? Yes. Did you believe I ran into liquidity problems with the Mag 7? Who would have thought? Don't even need to run a hedge fund to run into liquidity problems. Winston looking at MSTR and SNDK. Is it ever? I don't have the data on these, Winston. On these exotic tickers, SNDK, MSTR. Right now, I just got Ninja, which is these futures contracts. But if you want to pull up your screen and show us what you're looking at, we can look at it together. No big deal.
Yes, I can share my screen. Just give me a second.
Yeah.
Do you have the footprint charts on TradingView, or do you have to buy the premium?
I saw it in the premium. I think it was listed in one of those premium packages. So I'll start exploring that, see if it makes any sense. Could be a good one. All right. Here we go. Footprint charts. Look at that. Winston got it. Wow, it's complicated, man. Shit. Oh.
Yeah.
All right. All right, Winston, you're going to do some masterclass on footprint charts and tell us what you see.
No, actually, this is a scan disk that I'm looking for. I just entered when it was, yeah, pretty low. Then right now I'm fearing it is on the resistance level because I can see a rejection from here on the 30-minute candle from 720. Because the opponent reached, when I check it out, OI is even in 700. But it's not supposed to check the point, right?
Winston, I
Yeah.
can barely
Can you
hear
hear
you. Your mic's coming out. Could you get closer to it? Or... Oh, I can, but let's try it.
Let me just
The mic's really muffled, you know. Can hardly hear a word you're saying. Anyways, I got a little piece of what you were saying.
How about right now?
Oh, there we go. That's better.
Okay.
Yeah, let's try this.
All right. Okay. And now the price is around 700 level, so I am fearing this will go up or not. But there is a clear rejection from this level 720 on the SNDK. But the closing is above the value area high because I'm just following the Pitman's, that Pac-Man in our group. he's the one giving this kind of education. So I'm just following his, strategy on it. Just trying to how that would work for me. So that was the reason. But it is still working. I can handle, pretty quickly on this way. I can manage the risks. So this level, actually, I'm just asking, is the good level or what? I'm not sure about it. Because the trend is up. It's a very big trend, SNDK. So what's your opinion about it?
So the first thing is, if you're seeing the move to the upside right now off of this consolidation that you're looking at,
Yeah.
If you're taking that entry, then the target would be that high that you've got marked, that you said you're fearing. Was it 740 or something?
Yeah.
724. So that was the target zone. That's where there's sellers sitting up there. So target there if you're long, and that's take your profits there. And then once it gets there, see if it consolidates, then breaks out, then retests, then you got another move going to the upside to go along with your trend. Most likely it's gonna find resistance up there. It may pull back a little. If those sellers are truly aggressive, then it reverses. But with the trend being so firm to the upside, I'd say let it get up there. If you're long, take profits, and then once it gets there, wait and see if it really gives you a good set for another breakout and a long instead of a new trend or a continued trend.
Okay.
So,
Okay. Yeah. Okay. Yeah. So I'm ready for tomorrow. Let's see how that happens.
Cool. Now you got it.
Perfect. Yeah. Thank you.
Cool. All right, guys. Any other questions? Anything else on your minds you want to talk about before we end this one? Everyone good? There you go. Brian's already off to bed. All right, you guys know what you're doing. Very good. I love it. So today is, what's the day? It's Wednesday here, Tuesday night for you guys. I'm gonna work out what we're gonna do about the New York opening session. I'm gonna have different ideas in mind. I'll be back with you again Thursday. Tomorrow's Thursday. Anyways, whatever. It's in our calendar. All right, this was fun, guys. Thanks a lot. Thanks for hanging out. Always a good time. But next time you guys come, try and see if you have specific questions that you really need answered. That way we can dig right into it and use this time to solve some problems.
Yeah.
But hey, good stuff. Thanks again, guys. And
Thanks,
I'll be
Avi.
talking soon.
Thanks, Avi.
Thanks, Avi. Take
Thanks,
care.
Avi. Have a good day.
Take care.
Bye-bye.